Welcome to The Explainer. Today we're tearing down the IPO of CleanMax, a huge name in India's green energy scene. But here's the real question. Is this the golden ticket to investing in our energy future, or is it a gamble that's just a bit too risky? Let's get into it.
And yeah, that's really the heart of it, isn't it? We're going to dig into both sides of the coin here. The bright, shiny potential, and of course the risks hiding in the shadows. The goal, to give you everything you need to form your own take on this.
All right, first things first, who exactly is CleanMax? Well, think of them as the go-to green power supplier for the big guys, the corporates. They build and run these massive solar and wind farms, specifically to power things like factories, huge office buildings, and data centers. Essentially, they're helping big business clean up its act. And to give you a sense of scale, just look at this number. We're talking about 2.54 gigawatts of power already up and running. And get this, they have another 2.5 gigawatts in the pipeline. I mean, that is a staggering amount of clean energy. Okay, so we've got the big picture on who they are. Now let's get down to the nitty-gritty, the IPO itself. What are the core facts, the numbers you absolutely need to know? All right, if you're even thinking about this one, you'll want to circle these dates on your calendar. This is when the IPO officially opens for subscriptions and when we expect to see it hit the stock market. And here are the headline numbers. They're looking at a price band of about 1,000 to 1,053 rupees a share. All in, the total size of this IPO is going to be around 3,100 crore rupees. To put that in perspective, that's roughly 370 million US dollars.
But now, this is where it gets really interesting. You've got to look at where the money is actually going. See, only about 39% of it is a fresh issue. That's new cash going into the company to fuel growth. The rest, a whopping 61%, is an offer for sale. That means existing investors are the ones selling their shares and, well, cashing out. And that right there is a super important detail for anyone looking to invest.
Now, even before you or I could get a piece of the action, this IPO was already turning heads. I'm talking about the big fish, institutional investors like Singapore's Temasek, and heavyweights right here in India like SBI Life and Tata Investment Corp. They've already committed around 921 crore rupees as anchor investors. And that's usually seen as a pretty solid vote of confidence.
Okay, so with that as our foundation, let's talk about the good stuff. What's the big promise here? Let's lay out the bull case. All the reasons why you might be really optimistic about CleanMax.
Well, it really boils down to one word: growth. I mean, look at this number. We're seeing their revenue growing at a compound annual rate of 27%. That's the kind of consistent, fast-paced growth that really gets investors to sit up and pay attention. And this isn't just growth for growth's sake. It's built on a pretty solid foundation. For one, they're the market leader. They've got a client list of over 500 corporations. And maybe most importantly, their income is locked in with long-term contracts, what are called power purchase agreements, or PPAs. And that gives them fantastic visibility into what their revenue is going to look like for years to come. And if you zoom out and look at the big picture, the tailwinds pushing them forward are just massive. You've got companies everywhere under pressure to decarbonize. The Indian government has these incredibly ambitious renewable energy goals. And there's just a tidal web of global money hunting for ESG-friendly investments. CleanMax is sitting right in the middle of this perfect storm, ready to ride that wave.
Okay, but let's be real. It's never all sunshine and rainbows, right? Every single investment comes with risks. So let's flip the script and talk about the bear case. What are those potential clouds looming on the horizon for CleanMax?
Yeah, and this phrase from one of our sources really hits the nail on the head. There are challenges under the hood. It's a great reminder that you can't just look at that flashy revenue growth. You've got to pop the hood and see what's really going on with the engine.
And this chart, this tells a really powerful story at a glance. Look at that bar for revenue growth. It's shooting for the moon. That's awesome. But then look at the bar for profitability, things like return on equity. It's pretty low. So what does that tell you? It shows that even though they're getting bigger and bigger, they haven't quite figured out how to turn all that expansion into cold, hard profit just yet.
And this is the elephant in the room. We're talking about over 8,000 crore rupees in debt. Think about it like this. It's like taking out a massive mortgage to build your dream mansion. Sure, you need it to build something big, but those monthly interest payments, they can be a really heavy weight, constantly eating into whatever money you're making. So let's just quickly recap the big risks here. You've got this mountain of debt, right? Then you have profits that are, let's say, still a little shaky, just finding their feet. And you can't forget about the competition. We're talking giants like Adani Green and Top Power. And to top it all off, the whole renewable energy sector is super sensitive to government policy. One little change in the rules, and the entire game could shift. Even the early buzz in the market seems a bit cautious. The gray market premium, which is kind of like the unofficial stock market prediction for how an IPO will do on day one, it's super low. And that really suggests that the smart money isn't expecting a big immediate pop. They're seeing this as a wait-and-see, long-term story if they're seeing it at all.
Okay, so we've looked at the good, the bad, and the ugly. After weighing everything, where do we land? What's the final verdict on the CleanMax IPO?
There's an analogy I came across that just sums this whole thing up perfectly. It goes like this. CleanMax is like a solar farm at dawn. The potential for sunlight is immense, absolutely massive. But, and this is a big but, there are clouds of execution risk that could easily roll in and dim the whole picture.
And really, this is what it all boils down to, right here, side by side. On one hand, you have that immense potential, the sunlight. We're talking market leadership, incredible growth, and all those industry tailwinds. But on the other hand, you've got the clouds, that huge pile of debt, those razor-thin profits, and some really, really tough competition. It is the textbook definition of a high-risk, high-reward play.
So what's the key takeaway here? Well, it's that this IPO is definitely not for everyone, not by a long shot. This is probably a good fit for someone who's in it for the long haul, a patient investor who really buys into the whole clean energy transition story, and, crucially, has the stomach for some serious risk. If you're looking to just jump in and make a quick buck on listing day, this is almost certainly not the one for you.
Which brings us right back to where we started. Will CleanMax manage to capture all that sunlight? Or will it get overshadowed by those clouds we've been talking about? The company is standing at a crossroads, really. It's got all the right ingredients to be a massive success, but it's also facing some serious challenges. In the end, it's all going to come down to one thing: execution. Can they navigate their way through the storm? That's the billion-dollar question.